off. A very good day to you all. Welcome. The Wall Street Blockchain Alliance, in partnership with our friends at Member from Polsinelli, are very proud to present the following webinar: To Sell or Not to Sell, a discussion on the monetization of crypto insolvency claims. Recent turmoil in crypto markets has given rise to a rapidly growing ecosystem of crypto asset bankruptcy claims. In this session, our panel of experts will discuss how crypto asset claims are treated in bankruptcy, what's driving crypto customers to sell, what the investor perspectives on crypto claims are, and much more. Before we begin, a bit of housekeeping for today's session. This webinar is being recorded. All attendees will be in listen-only mode. Attendees, please, you're encouraged to submit your questions for our speakers using the Zoom Q&A function, and we will certainly reserve time at the end of this session to address questions. Please keep in mind that this event is offered for general information and educational purposes only, and it is not meant or intended to constitute investment, legal, tax, or accounting advice. David, you know I have a lot of lawyers as friends. And please keep in mind also that any views or opinions expressed during this event are those of the participants and do not necessarily represent those of the Wall Street Blockchain Alliance or our panelists' firms. With that, I want to kick off and dive right into it. And Stephen, I want to start with you. I want to level set a little bit here. What are we talking about when we talk about crypto bankruptcy claims? And we'll circulate through the rest of the group as well. But set the stage for us. What are they? Why are they important? And what should we be looking at?
Sure. Thank you, Ron and the Wall Street Blockchain Alliance, for co-hosting this with Polsinelli, as well as for this really amazingly broad panel that we have. I am a shareholder with Polsinelli, where I co-head our crypto and fintech group, as well as I have been involved in trading bankruptcy claims since at least Enron. So I've been involved in the claims for a while, for quite a while. And to kind of summarize it, when all of these companies have filed for bankruptcy, in most cases, the accounts that people have there are not treated as your money anymore. There are maybe some exceptions with custody claims, but rather they're an asset of the bankrupt company. And what the holder is given is a claim in the bankruptcy that will be paid out something. And we'll talk about a bit more of what that is. And that claim is what you had for your account. And many people are interested in seeing, is there a way I can sell this in advance? Can I monetize it? What does that mean? And we're here to talk a bit about that today.
Stephen, thanks very much. Vlad, I wanted to go to you, if I could, just to expand upon that a little bit. What is that market for bankruptcy claims trading? And what have you seen in the past couple of years or year from the perspective of crypto bankruptcy claims? How does that affect you and your business, and what are you seeing?
Yeah, Ron, thanks a lot for inviting me to participate. It's really a pleasure. My name is Vlad Jelisavcic. I'm with Cherokee Acquisition. Cherokee runs Claims Market, which is the premier marketplace for selling various Chapter 11 claims, including crypto claims. So, what we've seen is ever since Celsius filed in July of last year, is a huge acceptance of a web-based marketplace for selling claims. As many of the panelists, especially Steve knows, going back to Enron days, the market for bankruptcy claims is several decades old in its current modern form. But really, Celsius and Voyager lit the spark of a growing acceptance of a web-based marketplace. So at this point, we're the leading market venue for bankruptcy claims trading, and 100% of the crypto-related claims that we've traded have traded through our marketplace. So that's really the most impactful recent development.
Vlad, thanks. I want to paint a little bit of a picture for the audience as well when we talk about trading bankruptcy claims. And King, I'd like to pull you into this, because when those claims are traded, I'm thinking retail bankruptcy claims. I had an account at Celsius, for example, or Voyager, whatever it may be. The other side of that, there are investors looking to buy those claims. King, can you tell us a little bit about that investor perspective? And I'm using this to kind of paint a picture of the entirety of the ecosystem. There are certainly impacts. We'll talk about bankruptcy claims and preferences. We'll talk about tax. But King, what's the investor perspective on claims? What's that marketplace looking like?
Sure. Well, first of all, thanks for having me, Ron. So my background, I've been in distress investing for a long time, also since Enron actually started at Goldman Sachs, especially 6 years ago. Worked at Fortress, ran my own fund, and then was a Web3 founder for a while. So I've been deep in crypto for a number of years. I'm now working with Attestor, which is a London-based value fund with about $80 billion of assets under management. And I'm solely focused on crypto there. So to your question, clearly, these bankruptcies are actually very different. If you think about Celsius, Voyager, FTX, et cetera, and it's all about getting very comfortable with the process, getting comfortable with the intricacies, to even look at the situation and get involved in it, right? And because each is actually quite unique, the way they're working out, the way they're structured, it requires quite some upfront work, both legally in terms of analysis and the whole area around it. That's the first one. The second one is there enough liquidity? And is the liquidity the kind of liquidity that you need as a fund, given your size and what you're looking for? And that's also very different if you look at the situation and the different account holders. What's obviously unique about these is that in a traditional restructuring, you got bank lenders, you got bondholders, and then different sort of fairly straightforward cap structure. Here, you don't have that. You don't really have senior secured lenders, or it's negligible. It's only depositors. So that leads you to creditors being very large and very small and everything in between. And it leads to different dynamics, which is fascinating.
King, just sticking to that point real quickly. One of the conversations we have at the Wall Street Blockchain Alliance is often we have colleagues in banking and finance and trading and law and beyond, and some of them deeply involved in crypto assets and deeply involved in the evolution of crypto assets and blockchain capabilities. And there's still some ecosystem that says, or core of that says, no, we're not interested in crypto. Are investors in distressed securities or investors in bankruptcy claims, is there a core of that group that says, nope, I'm not going to touch crypto bankruptcy claims?
Yeah, it's a good point. I think so, because I think all of us in this group probably know the distressed space and the buy side quite well. And I would say the traditional distress fund likes hard assets, right? So either it's a good company with a real enterprise value or liquidatable assets like real estate or ships. And that is not always straightforward in the crypto space. So there's definitely, I would say, a sort of a binary approach, as in, don't even look at it. There's enough other stuff happening, which I also totally understand. And then there's a small subset that sort of digs a bit deeper into it.
Wait, they're not all securities? David will get the joke of me saying that. David, I wanted to pull you into this. You come from a very diverse background. You and I have been friends and colleagues for some time. Your background at Voyager, I think, is critical here. Would love to pull you into this and ask, does it make sense for bankruptcy claimants, customers of Celsius or Voyager to sell their claims? In your personal perspective, how do you answer that? You're on mute, buddy.
That's a good question, Ron. For those who don't know me, I'm David Brill. I am the chair of the Crypto Asset Working Group here at WSBA. I am also an arbitrator for GBAT, and I am the former Deputy General Counsel for Voyager Digital. So look, I think we have a unique situation in these bankruptcies where the claimants and the creditors are almost solely customers of the platforms. And so their liquidity needs may be different than institutions. So I think this is a vehicle for some customers who may want liquidity faster than they may receive it in the bankruptcy process, which takes a lot of twists and turns for customers to get access to that liquidity. The challenge is, what can you get for your claim, and what do you think you would get for your claim if you went through the whole process? And so that's really the main issue. And it's really, I think for customers, it's probably liquidity. I'm not really in a position to give customers advice on what they should or shouldn't do, but it is an option available to them if they needed more immediate liquidity.
And is it on the belief that it's better than zero, David? I know that's a bit of a parochial kind of phrasing of it, but
look, I think there's a misnomer that in the case of the customers in these bankruptcy cases that they're going to get zero. That's just not accurate. It might feel like zero compared to what they may have had on the platforms, but they're not getting zero. So I think there is always a return. I think that the creditors committees try and do a good job of giving a range of what the returns may look like. But obviously, crypto is it moves fast. We talk about this in our crypto assets working group. It's volatile, it moves fast. So, there may be times where it may be strategic to consider this if crypto has run up and you feel like your claim may be worth more than if crypto were to go down 10 or 20% too.
Right. David, thank you. I want to pull Robert into this. There's a lot we're going to talk about, particularly later on, Robert, from a tax perspective. But what is your perspective on this kind of ecosystem of crypto bankruptcy claims? And what are you focusing on?
I'm focusing on the nature of the claim and how it's reported on a tax return and how you measure the economics, and that's beyond measuring the economics is beyond the scope of this. But U.S. tax law is still, it was originally crafted. The Internal Revenue Code that we're working with is pre-digital. Even if you go back to the 54 code into the 86 changes, it never anticipated the types of assets that were traded today. And we're still dealing with old types of tangible feeling property, real tangible property. It never had never envisioned what we have today. So we're still working with the same old rules that we have with respect to property. And with respect to property, most people that have invested in crypto have done so as investors. As an investor, when you have a gain or a loss in the sale, it's a capital gain or a capital loss, depending on your holding period. However, if you're in the trader business of trading crypto, it may be ordinary, but that's going to be the exception, not the rule. So the best that you can hope for out of this, if you were to sell, let's say, your bankruptcy claim, just to give an example. Let's say, and this is not tax advice, it's just for illustrative purposes. Let's say you invested loaned, however, whatever it is, you gave over $25,000 worth of crypto and you sold it for $6,000. The most that you could get is a $19,000 loss that in most cases would be a capital loss that's subject to capital loss limitation. But there are, as David said, there might be some strategic planning opportunities with respect to selling your claims in 2023. So, that's the general rule. The same would be true if with respect to a fund or something else that's buying these things. When there's a return on these things and they're selling, it's probably going to come out as capital gain, either capital gain or capital loss with respect to this, unless you're in the trader business on the other side of trading bankruptcy claims. So that's the overall viewpoint of the federal taxation. State's going to more or less follow this. So that's what you're looking at.
And your firm and what you do, Robert, for the audience?
Oh, I'm sorry.
It's okay.
Yeah. Okay. I'm Robert Tobey. I'm the co-chair, the co-chair, or the chair of taxation on the WSBA accounting group. I also serve on two AICPA committees trying to come up with the rules with respect to accounting and taxation side of this. I work with the IRS quite often with the general counsel's office, that Chris Werble, who's in charge of coming up with the crypto rules, who's always under stress from our questions and doesn't always provide clarity.
I don't envy him the task. Robert, thanks so much. We have some questions coming in to the audience. Please certainly keep your questions coming. We'll address them towards the end of this session. And as you all know, or at least some of you know, we tend to make these very conversational. So please weigh in where you see fit. Vlad, I want to pivot to you a little bit, and then I want to open up this particular topic to the rest of the group as well. And, as I mentioned in our prep conversations, crypto bankruptcy claims writ large was a new ecosystem for me. Can you tell us a little bit about the importance of preferences and what that looks like in the context of bankruptcy claims?
I think potential preference liability is central to the risk management and risk evaluation of investing in claims, especially crypto claims, because there's just the nature of the account. It had 24/7, 365 liquidity. And so many, creditors would make withdrawals during the 90-day preference period prior to the commencement of the bankruptcy case. And many were also making deposits. So from a trading perspective, getting the data on the gross amount of 90-day withdrawals and 90-day deposits is really essential to evaluating the risk of a claim.
Yeah,
Vlad?
let me just step in on that for a second. I mean, I think stepping back a little bit about on claims for the most part, and I think this is probably one of the biggest hurdles to selling a claim, that the risk that all of the Celsius or FTX claims is going to pay at 10 cents on the dollar when you're selling your claim at 20 is a risk that you're selling. When one is selling their claim, for the most part, and there are definitely exceptions to this, and please disagree if you're buying claims differently sometimes. For the most part, what the buyer is buying is the risk of the case in general, the risk of the individual claim holder. Maybe the claim holder doesn't really hold their claim. Maybe there is a set off fraudulent action, or maybe, as the question asked and Vlad was talking about, there's a concept in bankruptcy called a preference, where if you took your money out in a non-ordinary way within the last 90 days for all people and with an insider a longer period of time, you actually have to pay that back in. And the idea there is to try to make it fair for all creditors. And if you happen to have taken your money out the day beforehand and that wasn't your ordinary business, you have to pay it back. So one of the biggest concerns that sellers will have, and that will come up, is that maybe that my $1 million claim is only a $100,000 claim because I'm going to have to pay back that other $900,000. Or maybe in my nightmare scenario, instead of having $1 million claim, I actually have a $500,000 bill. And there are a lot of claim holders now losing a lot of sleep. I just know because of the emails I get at 3 a.m, worried that what was an asset, and just to go on David's point, I mean, all these claims are going to pay something, but there are people who are going to get bills.
Could I just interject and add
Go
something?
for it. Yeah.
So absolutely agree with everything that Stephen said. And in fact, this issue is so big. I think in the case of Celsius alone, it was disclosed that about 3 to 3.5 billion was withdrawn during that 90-day period. So it's a huge, issue in dollar amount and also in the number of creditors. There was recent disclosure in the docket that about 35,000 Celsius creditors withdrew during that 90-day period. And so consequently, Celsius has had to come up with preference claim management techniques to sort of handle that gargantuan amount of work, and also, maybe to be fair to the little guy. So I thought it was worth mentioning that in the Celsius term sheet that was filed earlier this month, that the debtor is proposing to waive all preference claims below 100,000 in gross withdrawals during the 90-day period. Between 100 and 250, they're offering to settle at 27.5%. So I thought that was interesting that they sort of had that management technique.
Vlad,
And just to be clear, is that based on the amount of the preference or the amount of the claim?
It's the amount, it's the gross withdrawal. And by the way, as just to remind the audience, so Celsius is expected to file their plan by the end of this week. And so I was just referring to a Nova Wolf term sheet that was filed a few weeks ago.
I want to weigh in. Thank you, Vlad. Just, Stephen, I want to come back to one thing, and this is from a definite novice perspective, but it feels like in the prep session that we had and the current comment you just made, that a lot of the risk is with the seller. Is that true? Are novices seeing that correctly?
Well, it depends what risk. It really depends what risk you're talking about. The risk of the case and the risk of the bankruptcy case and what's going to happen with the case, whether there'll be a 1 cent on the dollar to pay everyone back or 99 cents on the dollar to pay everyone back. That's a risk that, I mean, just think about fairness. Someone like at a fund probably has a sense of being able to figure out that risk. And that risk could be priced, and that would make sense to sell. The risk that you're not, and look, people have structured interesting things that don't exactly do this, but for the most part, how is a buyer is not going to be able to diligence your particular risk, and that could be the risk of a preference, that could be a risk of really anything else. So, which is why once the debtor issues a settlement agreement, and you have a settled claim, in which case you have an amount that's agreed to, that will make it easier to trade and there'll be much less of this risk.
Stephen, thank you. King, is that from an investor perspective? Stephen made an interesting comment. Can you corroborate that a bit for us from the investor perspective, the ability to price risk and understand the risk versus Ron's retail account and I'm a claimant in a bankruptcy filing? How do you see that perspective?
Sure. Look, interestingly enough, every claim is different, right? Because it has different underlying assets, but that's sort of okay. If you think about FTX, which is the largest, but the preference is very different. There's clearly people with 0 withdrawals 9 days. That's what we call a clean claim. That has a very clean price. Everything else becomes more muddy. And what I think is good to know, or is good to mention, is that the withdrawals and deposit activity is actually something you need to really go through. It's not as simple as saying, oh, someone withdrew in 90 days 200,000 and deposit 100,000. That's 100,000 deposit. Is actually the timing actually really matters. That's what's called the new value defense. So if you put in money after you withdrew, that reduces your withdrawal, your preference. So that's something that's a bit more detailed than just adding up, and that's good to know, I think. Secondly, is that ultimately the liability always stays with the seller. So we could buy a claim, and if there's preference risk, the estate or the litigation trust for preference will always go after the original holder, which is the seller. And that then poses a risk for the buyer, because if the seller says, look, I'm not there, I'm not going to pay this preference liability that I'm getting notified of, then there's clearly a disallowance risk for the claim to be bought. So you can't just separate the two. People sometimes think, oh, you know what, why don't you buy my claim? I'll deal with the preference. You know, we'll see how that happens. Maybe it takes 5 years. We'll see it later. As a buyer, we can really assume that risk, because our claim will then be invalidated if the original seller doesn't pay the preference out. So that's one thing to note. I think separately, there's clearly the big question, as you know, in FTX, 5 billion was withdrawn the weekend before they filed. So that's a very large amount. And there's clearly a big question out there that certainly no one knows, certainly I don't know, is sort of what the hurdle is. You mentioned 100,000, Vlad, on Celsius. What's the hurdle going to be on FTX, right? If you are a US-based person, you had a 1 million preference risk, are you at risk? If you're international, there's sort of the practicalities of what can be pursued, and then the legal matter, and that's a big question out there. So as a buyer, you take some views there and some bets on that front.
King, thanks. And just David, I know we're going to come to you. You've got a lot to add to this, but for those in the audience, again, please do continue to submit your questions. I know some of you have reached out to me directly. It's a webinar. Submit your questions via the Q&A, not the chat. You shouldn't have a chat function. David, I want to come to you and thank you all for that background. You've been an operator in this space. You've kind of lived through one of the premier examples from the perspective of Voyager. Can you speak to a little bit of what King and the others were talking about? And I know you wanted to raise some points as well.
Yeah, so one of the things I wanted to raise that's really interesting in the crypto ecosystem is the interrelatedness of the parties. So not only may a customer have a potential preference for the withdrawal in the 90 days, but Celsius, FTX, and Voyager as organizations did business with each other, and there are some substantial preference claims between those parties. So, and you could see filings of those kind of things on the docket in each of those cases. So another element into valuing your claim is to try to read the tea leaves and see between these interrelated debtor-on-debtor preference claims where you may think things fall out. So I think it's more unusual than a traditional bankruptcy case. So not when you're pricing it, it's not always so simple as looking at a customer claim, but also looking at, well, what is the pie that the customers are actually going to split?
David, staying with that point, and I want to open this up for the wider group as well. And Robert, I want to pull you into this, but real quickly, David, are valid claims harder to differentiate in the crypto space, do you think, than non-crypto space?
Look, I don't think so. I think in terms, it's just a different bucket of claims. I think in terms of this, it's, you're seeing a lot of customer claims because we're seeing platforms, exchange platforms or brokerage platforms file. Whereas in the traditional markets, you'd have SIPC protection, or you're just not seeing broker dealers, go bust without the SIPC insurance. So when that kicks in, I think a lot of those claims go away or don't exist. So I think the customer element to this is probably more unique, and the 24/7 nature of it. And then the last thing that's really unique is, pricing the crypto, because in some bankruptcy cases, I think the prevailing rule is it's sort of dollarized as of the day of the bankruptcy filing. What your crypto was in dollars, but obviously crypto moves so much and, is volatile like other assets. So there's a whole pricing dynamic that doesn't exist. Whereas if you owned 100 shares of IBM on a certain date, it was worth X. The nature of crypto and how that works, and no SIPC being involved, just totally changes the dynamic of these customer claims.
David, thanks. Robert and Stephen, I'd like to pull you both into kind of a bit of an evolution of that point. When claimants come forward, Robert from the accounting perspective and Stephen from the law perspective, how are customers dealing with, what are they coming to you and saying in the wake of a bankruptcy? Stephen, do you want to kick that off? How are you addressing this with customers, and what are you telling them to be wary of?
Well, firstly, it's a lot of, it is, as David pointed out, this is definitely, in my experience with trading claims, this is and with assisting people with understanding their claim and filing their proofs of claim in the bankruptcy. You're not used to dealing with with so many individual customers. You could deal with you could deal with a vendor or a corporate vendor, but this is an industry that you've not had as many individuals. And I think, not that there aren't funds also and funds trading their claims, but you have a lot of individuals calling, both people who've lost a lot of money, kind of thought their money was secure, their crypto money was secure. At least this was a part of it. They didn't have to worry. And now lately there was a level of panic that, oh my God, my claim may probably worth 30 cents on the dollar. My claim may be worth 50 cents on the dollar. There's a whole nother level of worry that, oh my God, I may end up with a bill. And that's to some extent, that's a whole nother level of worry. I think the biggest concern so far, at least what I've seen among people interested in selling their claim, has been the bid ask, or the difference of sure, I'd be happy to sell my claim for 60, but I'm not happy to sell my claim for 40 or 30, and hoping not. Though I think Vlad could point out that a lot of that relates to the value of Bitcoin, so maybe you're better off selling it on that. So that's really what you're seeing. What we're seeing there.
Stephen, thanks. Robert, from the accounting perspective, what is that conversation with clients for you?
Yeah, well, it's a difficult one, and first they're looking for, can I get a worthlessness loss, or can I get an abandonment loss if I abandon, if I give up permanently my permanent key and put it into a null wallet, or do something like that. Well, the IRS clearly shut the door on that. A realization event absent selling your claim may be years down the road from a tax perspective. You may be holding on to the value and not being able to recognize any tax loss for it until this thing is settled. And Lord knows when that is. My advice to them is, if you can monetize it to some extent today, do it. That's probably the best deal you have, because the most you're going to get, if you get very little and have to write off the difference, is the tax savings on it. That just doesn't make, to me, economic sense. So get as much as you can today, because you don't know what you're going to get tomorrow, and you don't know if you're ever going to get anything. The only time that and most of these claims are not, as Stephen said, we're not talking about, in the scheme of things, millions of dollars in most cases. We're talking about hundreds to thousands to maybe tens of thousands of dollars. I would bet the median, and Stephen, you'd know about this, is probably somewhere between 50 and 100,000 bucks. I mean, we're not talking a lot of money. Stephen, is that fair to say that that's like the average claim?
It's hard to say. And also it really depends what number you use to value it. I mean, many people in their mind, the claim is from the height of what Bitcoin was, but
Okay.
a significant number of parties out there with claims, even at bankruptcy filing values and these are individuals, and particularly sometimes they have it in multiple accounts, but it's individuals in the $5 to $10 million range.
Right.
I mean, people with significant losses that won't fall under to some extent, if it's a smaller claim, and not that we haven't helped with them, I mean, just it's you don't want to represent somebody in something that's not going to really, there's too little money involved. But a number of I've seen at least 10 or 15 people we've been speaking to with claims in the $5 to $10 million dollar range, which is real loss of money. And in many cases, unfortunately, it's most of the people's net worth. I mean, you're not used to seeing, as a lawyer in this space for a long time, not used to seeing so many people actually having lost real money that they were counting on and were planning to use to live or retire. It's a different, much more human perspective than I've seen before.
Yeah, and there are ones like that, and I agree. The humanness of this is really something, because there's a lot of people that put this into their IRAs, they put it into other things that they were planning to live on. And if you're an IRA, it's hard to get any, it's sequestered within the bounds of a retirement plan. So that's, that's going to hurt. We were talking about this yesterday. The only planning opportunity I see with respect to this is, if you've had a liquidity event in 2023, that's a significant liquidity event, and you have a significant potential bankruptcy claim that would give you a capital loss that could offset that capital gain income. I'd say there's a lot of value to doing that, because you get two things. You increase your internal rate of return with respect to the sale of your business, because you've knocked down the tax on the capital gain, and you're getting some cash for your bankruptcy claim. I mean, I think that that's the best planning opportunity I can get out of this on a tax side with respect to these claims. It's because of the way that the tax laws work with respect to all of this, and with the IRS's rulings with respect to this, it's going to be tough to get value out of this unless you sell it today for a long time, in my perspective.
Go ahead, Vlad. Robert, thank you.
Just a quick question, Robert. Does it matter if the consideration paid by a buyer to a seller at a lower price, at a market price, does it matter if it's fiat or crypto? The consideration?
No. Property is property. It's going to be valued at what so crypto, obviously, fiat is fiat, right? The value of the crypto is going to be valued at the time of exchange. So and that's a good point, Vlad, because you could also, as we were talking about, you can time where to get the best value out of it. So are these claims pegged on Bitcoin or Ether or a combination of them? How are the claims? Whatever.
I mean, it's across the board, but I think you can broadly analogize the relative market caps of crypto to what's in the accounts.
Fair enough. So you do. So here's another thing you have with this. Instead of getting fiat, you have an ability to maximize the value of your claim based upon what the crypto you're receiving in return. So there's another planning opportunity. Timing is everything.
So like-kind exchange doesn't apply, right?
No. Oh no. Wouldn't it be nice if it did? The IRS kicked that one out the door years ago.
Don't open that Pandora's box, Vlad.
Please, let's not go down that road.
Robert, Vladimir, thank you. David, I know you had a comment. Please go.
I did. So I'm going to give you an example of price volatility. Like we're expecting a ruling in the Ripple case shortly. And for example, if the court were to rule in favor of Ripple, perhaps you could see a lot of other altcoins rally on that type of ruling, because there might be perceived less regulatory risk for altcoins going forward. So you could see, a big a big rise in altcoins, we'll say, and then maybe perhaps for specific claims, it may make sense to try and sell the claim at that point because they should have more value to that claim. So it can be because there's so many customers involved in these bankruptcies, it can be very event driven, on what's going on in the crypto space and what value may come to customers when, crypto is being sold on their behalf, as part of the bankruptcy estate. So I think, these are just things to play with and understand.
David, thanks. I want to rip up the script a little bit. And Robert, I think you alluded to something, and I wanted to throw this out for the group. Crypto being crypto, and we're talking about potentially years-long settlements through bankruptcy. Is that a reflection of the lack of bankruptcy court's understanding of crypto?
Oh, sorry.
No, go ahead, Stephen.
I think it's to point out, that could be true, but in most bankruptcy cases, most of the major bankruptcy cases, there was not one payment. What happens is a plan, and this is for many people not used to U.S. bankruptcy, this is a weird idea that the company itself files a plan of reorganization of how to pay back the creditors. And even in a liquidation, there's a liquidation where there's some assets, but in almost all the major bankruptcies, and I'm sure King could come up with an example where it wasn't. There's some, but in most of the major traded bankruptcies, PG&E in the U.S. is an example, not that way because it paid back in full. There was a lot of outstanding litigation and things going on when the actual emergence happened, and the payments happened over time. In most cases, sometimes it's done through a trust interest, kind of similar to the coin token that's being discussed in some of these cases. And in other cases, it's just Enron made payments every 6 months. So the Enron claims at some point were trading at 15 cents on the dollar, but over a 15-year period, people got payments as things happened. The same in Madoff. Madoff just made the 14th distribution 2 weeks ago. So it's not uncommon due to the complexity of these cases for the payments to happen over a 10-year period, because David made a very good point beforehand, is said part of what values a claim is how many assets are in the pool. And that could change based on more assets going in or more claims being made. So as litigation is settled or big preferences are put in, there's more money and more money is paid out. So that's been the way big cases have been working for the last 20 years.
Stephen, thanks. Anyone else want to weigh in on that?
Yeah, sure, Ron. I would say that on that front, I've personally been actually quite impressed with the court so far, and probably Celsius is the best example because that was the first one. So some of the rulings we've seen have been, I think, quite sort of spot on, fairly quick. Give you one example, right? There was also a question, how is the CEL token being treated, which is the native token of the Celsius platform. And they came out with, I think, a pretty good solution, which is that, look, they concluded, surprise, surprise, that the price is artificially high. So in terms of dollarizing that Celsius claimed, if you had those tokens, they used the ICO price, which is a lot lower. But it's a fair conclusion, and that then becomes a bit of a framework for how things are being treated going forward. Which obviously in the FTX case will be there will be many insights from each previous case that can be used there. So I think the duration of these cases, which will be long, for instance, on FTX, is more related to the, as David said, interconnectivity, a lot of the litigation back and forth, big preferences, small preferences, and also some of the complexity in the 130, data entities.
Right. And Stephen hit on an interesting used a key word in there. He said they were paid out in money. So what are these claims going to be paid out in? So if you think about that, if you're a bankruptcy trustee, you have a fiduciary duty to maximize the value of what the claimants are going to get. And that could be a timing issue for the bankruptcy trustee if they're paying out money rather than Bitcoin to settle these bankruptcy claims. To me, that's going to be one of the fascinating things about all this, is how are these, in what are these claims settled?
King Robert, thank you. Go ahead, David.
Ron, I wanted to add that, also, I don't think the timing for when these claims would get paid back is totally a black box. Like I think for instance, in the Voyager case, I think Judge Wiles has done an excellent job. And also, there is a plan of reorganization that was approved, a couple of weeks ago. Now the government is appealing that, and hopefully, that should get resolved, shortly, because it's really unfair to the customers at this point that the government is appealing this. But there is a timing for when payment will be made to customers in the Voyager case. So I think as you look at the complexity of the cases, I think the judges in these different cases are really trying, because there's so many customers involved. At least I can talk to the Voyager case and moving the case through and trying to get resolution in an orderly and timely manner. I think the Celsius and FTX bankruptcies are more complex. There are fraud allegations. There's, criminal charges in the FTX one. There's fraud charges in the, Celsius one. So I think that complicates matters.
David,
I would add to that. I mean, I think it's what King was saying about Celsius, is definitely true. And I would say even more so about Voyager. I mean, it is somewhat a simpler case, but it was run extremely efficiently and extremely well. I mean, the company seems to have a problem that it seems to want to date bad people a little bit. So it seems to be more an issue with who the companies that keeps on trying to do a deal with have end up with legal issues. But other than that, it's the speed of it and the speed that they had a plan out already is really kind of amazing.
David, I feel like there's a little bit of a response / potential rebuttal to some of that.
Well, look, I think you can only sell to people who show up and have money who want to buy. In the first instance,
For those not familiar, I mean, basically, Voyager did a deal, a very contested 2-month auction, and FTX won, not necessarily to take over the crypto accounts, but to buy the rights to the account. And afterwards, they went to Binance, and lately the government has been challenging that, and Binance USA has had some legal issues. So it's clearly no fault of theirs, and those were the two bidders that came in, but it's led to another holdup.
It is definitely an interesting.
Yeah, I would just say, Ron, with the Binance one, it's just unfortunate that the government waited till the last hour to sort of file a claim and raise these objections.
We can have very deep conversations between the 6 of us on government and regulator action in the crypto space. I think that's an entirely new session. Yes. But all this raises a point, and I would love to get Vladimir and King's perspectives on this. And David, you alluded to something that's been in the news, which is SEC contested the Voyager bankruptcy plan, and the judge kind of knocked that down and let it proceed. And then almost immediately, the Department of Justice put forward hey, you shouldn't do this. It's really bad. We'll figure out why. King Vladimir, from the perspective of the investor side of it, and I don't know if it's necessarily just a crypto conversation, but what does the investor side of it look like? Or Vladimir, how does that marketplace respond when you see, hey, there's a bankruptcy plan, and now there might not be a bankruptcy plan? How does that impact, King, your investment decisions? Vladimir, how does that impact the marketplace and the ecosystem itself? King, do you want to kind of kick that off?
Sure. No, it's absolutely right. These are very sort of binary outcomes. And especially in crypto, there's a lot of scrutiny from the regulator, from the DOJ, et cetera. Yeah. So there's not much more to say about it than that that any plan is really not finalized until it's done and closed, right? And up to that point, it's a matter of pricing it in, risk management, sizing, et cetera, et cetera. That's all you can do. You got to be very eyes wide open that these are real risks out there. On Voyager specifically, it is kind of crazy if you think about sort of the left fielders coming left, right, and center. That's kind of unique, even for bankruptcy cases. But it's part of life in crypto, and there'll be more unknowns in any of these cases, right? You see things happening on FTX almost every week that are coming out. So it's part of the investment process, unfortunately. Well, fortunately or unfortunately, I think it's just what it is.
I think we all end the day, all 6 of us, with part of life in crypto at the end of a long, hard day. Go ahead, David.
Ron, I did want to ask a question to the panelists, just came to me now, and I know we're talking about taxes too, but what would happen in the Celsius case if it's determined that Celsius was a Ponzi for a long period of time? How would that change how claims traded or the tax treatment?
Don't do that to Robert.
There's a pretty strong chance that may be the case if you read the examiner's report. So curious what you think, Robert.
I'm going to tell you what the issue is. You'd have an issue currently under current tax law because of the Tax Cuts and Jobs Act of 2018. not allowing theft or casualty losses. The only thing that you could get is an exception similar to the Madoff. I think it was a revenue procedure. I don't believe it was a revenue ruling. Something allowing that is a miscellaneous. These are all miscellaneous itemized deductions, and taking them as that. Absent specific, and I was seeing if Annette Nellen was here. We have been kicking around guidance, issuing guidance with the tax aspects of all this stuff, and every time we come along, we come into it, we literally get to a brick wall with current tax law, allowing what some of these losses are. If they're worthless securities, you may get them. If it's a theft loss or a Ponzi scheme loss, you're not going to get them under current tax law. So you got to be very careful of how these are crafted and what the tax outcomes are. And here's what I'm going to tell you, David. This is we have had conversations with Chief Counsel's office about what these things are going to happen, and my hope is that we'd get a ruling or a Chief Counsel's opinion or something that it would be similar to the Madoff Ponzi scheme loss. But yeah, all I can say is stay tuned.
Robert, thanks. We've got about 10 minutes or so. We've got a bunch of great questions coming in. Please do keep them coming in. Vladimir, I do want to come back to you with one thing, and just for a few moments, just removing crypto per se. Again, as I mentioned to all of you in prep, I wasn't fully aware of the depth of the bankruptcy claims marketplace and trading. How does that operate, Vlad? Can you give us kind of the thumbnail of here's what happens when someone wants to trade a bankruptcy claim and leverage the work you do, for example, in that?
Yeah, sure, Ron. I think it's just by way of like an overview. I'd say pre-crypto, there were about 20 very large, so sort of $5 to $10 billion in assets on average, hedge funds that invested in 90. It sort of controlled like 90 to 95% of all investable assets that were dedicated to distressed, and they ended up buying in excess of 90% of all claims. That's still, in general, directionally the case. There are a number of new entrants, and this is really sort of a crypto-specific development. I kind of view it as somewhat of the democratization of finance, where we've got about 15 or 20 new buyers that are more crypto native that have not previously invested in bankruptcy claims. And so an online marketplace like Claims Market is the ideal venue for bringing together sellers and buyers. So just really quickly, so when a seller wants to list their claim for sale on Claims Market, they enter the marketplace with a firm offer to sell, which is usually an aspirational offer somewhat above the current bid price. We perform all sort of document prep for them and display relevant diligence for the benefit of buyers. And really the key is when that claim gets listed, it gets shown to all of our registered buyers. So it ensures sellers the opportunity to access the entire marketplace of all interested buyers with one point of contact.
Vlad, really appreciate that. Thank you very much.
Just to add one quick thing on that, and then afterwards, the parties do sign some sort of purchase agreement. There is a form of one that's quite a good form on Vlad's website, but particularly for larger ones, there's probably some level of negotiation. And then, assuming that a proof of claim was filed in the bankruptcy court, there is a public notice that is filed on the docket in the case where the actual claim is transferred. And then there are times in which the parties have to deal with, if you're worried about a preference risk, you maybe hold back some of the money, you get a parent guarantee, and then there's those financial discussions will happen, particularly with larger claims. And I think based on what we're seeing, at least the term sheet, we're seeing that there may be a real bifurcation here in which the smaller claims can trade almost automatically with just signing some documents online, and then the larger claims are going to need more work because you're going to have to figure out the preference.
Great. Vlad, Stephen, thank you very much. I want to give each of you kind of a couple of moments on final thoughts, because we do need to get to Q&A. or what you're looking forward to or seeing coming down the road. David, why don't we start with you? What's keeping you up at night, or what are you thinking about going forward?
Look, in the first instance, even though I just recently left Voyager, I would like to see that bankruptcy resolved quickly and for customers to get their, either fiat or crypto back as soon as possible. I think with the other, major bankruptcies, really curious to see, where the criminal part of it plays in and how that affects the claims. And my hope is, and it sounds like in some of our speakers have talked about it, that the smaller customers are somewhat insulated from preference claims and things like that, because I think it's more their, $10,000 movement off the platform is more material to them than to other, larger institutional, holders on these platforms.
David, thanks so much. Robert, aside from the many, many conversations you have with our friendly national tax collector, what are you looking forward to? What are you seeing coming down the road?
No regulations with respect to crypto trading and any of this, any treasury regulations. It's probably going to come out through revenue procedures, your chief counsel memorandum, things like that. I hope they get it. I hope the IRS has somebody working on this stuff, because it's going to, we as practitioners and you guys as traders in this space clearly want certainty. I want certainty. My clients want certainty, and there isn't any right now. I have a very difficult time counseling people because I don't know what the outcome is going to be under current tax law. This is still dealing with property. In certain provisions of the Internal Revenue Code that would allow you to take loss talk about money. They don't talk about property. It's tough. It's tough on us. It's just, like Stephen said, those are the 3 o'clock in the morning calls that you get. Is like, what is this stuff and how do I report it and when do I recognize gain and loss with respect to it?
Robert, thanks. Thanks so much. Vlad, closing thought.
My closing thought is, I think it's very improper what the SEC is doing with the regulation by litigation. I think they're taking a lot of risk. I think they're overreaching. And so I want them to start losing some of their overly aggressive lawsuits. And specifically, I want to see them lose their objection to exculpation of bankruptcy professionals as a matter of principle, and also in order to allow the Voyager case to move forward.
I think we don't like regulation by enforcement line forms to the left, Vlad. So I appreciate your perspective. We all do. Thank you. King, and then finally, Stephen, closing thoughts.
Sure. I mean, we've seen an increase in liquidity of claims on especially FTX now that prices moved up, which I think is a great thing, and hopefully that will continue. So that's specifically something we look forward to continue. Secondly, I think in terms of cases, clear, there's a lot of stuff happening in FTX. But also Genesis, we haven't really mentioned. There's obviously sort of a deal that's been, the term sheet's been out. So very curious what's going to happen there. So lots of stuff that's going to continue to be interesting. Yeah,
and I think Genesis is in one of our Q&As. We'll try to get to as many as we can. King, thank you. Mr. Rutenberg, your closing thought real quickly, and we'll dive into questions.
Yeah, I think the industry as a whole, I mean, I really think that there's been a huge amount of interesting innovation and thoughts about other forms of ownership and of assets in the crypto space. And unfortunately, it's had the dual problems of a terrible regulation plus it's been its own worst enemy. And I just hope that through all the people involved here, we can get over it to help both individual people here get a better recovery, as well as to help the innovation of this industry really lead to a better society and not worse.
Stephen, appreciate that. Great point. Let's dive right into Q&A. And we're going to make this open forum. Anyone can answer. Marcel had a really early question, which is great. I think we addressed it. Will creditors be able to receive their claim in kind via tokens, or is the expectation that it will be a cash payment? Who wants to be brave enough to take that one?
I think a cash payment is likely. I mean, there are a lot of people were hoping, and this is a gross overgeneralization. I think a cash payment is likely, or at least what's almost certain is that you're not going to get back what you put in. I mean, originally, a lot of people were hoping that if they put in Bitcoin, they'd get back Bitcoin. I don't think that's really going to happen. There are plenty of kinds of payment in kind, but not necessarily of what you put in. But I don't know if King, how you're looking at it, or.
Yeah, look, it's really case specific, right? We think it's going to be a matter of what's practical for the estate to do. To be fair, my personal view, I think on FTX, I think it's very hard to do it in kind, given all the different derivatives positions, et cetera, shorts. So I think it's going to be they're going to try to keep it simple, but who knows? That's my.
And I think the regulators aren't going to be happy if they're paying people. There's a lot of reasons to think, both practical and regulation, that people are going to get paid in kind. In almost all that's going to be the rule. There may be exceptions.
Yeah, I would add, Ron, in the Voyager case, I think there'll be a choice for people to be paid in fiat or in kind, but
Yep.
what they're getting in kind is a percentage of what they had on the platform, not the full 1-for-1.
Great. Thank you all. I want to address a question that Lewis put in a couple of times, which I think is important. Do you think preference in FTX will be limited to 90 days? Anyone?
Yeah, unless you're an insider. Personally, I think so. Yeah.
Thank you.
But as David said, it's complicated who might be considered an insider here, but for the most part.
Yep. Great. Andreas had a great question. What is the risk of clawbacks over a 90-day withdrawal window or a 2-year window? In the case of fraud, will these clawbacks be made, and can they be netted with claims? No one wants to answer that question.
I mean, I think the judge in the Celsius case has, some meaty issues to deal with. I'm not a pure bankruptcy practitioner, but it looks like their fraud went on at Celsius, just again based on the examiner's report and other reporting. So I guess that's a good question, is if a fraud did occur, and that the same protagonists who had committed fraud also have claims against the estate. How is that handled?
Great. Thank you, David. I think we've got time for a couple more questions. And I think these two are really, really interesting. Actually, one might be quick. One of you referenced Genesis. Someone asked, what is the current market rate for Genesis unsecured claims? Does anyone know?
Yeah, we're quoting Genesis claims, 45 indicative bid, 55 indicative asking price.
And maybe add some color there to what Vlad's saying. Is interesting is that the offer side, so what people are sort of having in their mind to sell, is a lot higher on Genesis, because the term sheet sort of stipulates a new plan with creditors getting cash / crypto, new bonds, and new equity versus DCG. And on the tin, that number is fairly high. I think it's between 80 and par, even above par in some scenarios. But the way clearly most restructuring professionals look at it, you look at sort of the post-market value of these, which would be below par, which is why the market is a lot lower than the ask price.
King, thanks very much. We got time for one last question, and I think it's an important one. With all of the scams and hacks in the crypto space, we can debate that. How do you ensure you're not buying assets evolved in illicit activity? That's a really interesting perspective. Who wants to take that one?
I can have a first stab at that. This is where you make a real difference as a buyer between having an institutional seller and an individual seller. It's all about risk, sort of risk estimates, right? And clearly, it's a bit higher on individual sellers. And they're really depending on the seller and the size. You got to do your due diligence, and some of it may include wallet tracing and other services that are sort of fraud related.
King, thank you so much. Gents, we are out of time. This is a complicated topic. I feel like there was a session 2.0 coming up down the road for all of us. But again, thank you all for your thought leadership. We'll have the recording available publicly as well. For all the attendees, thank you for your great questions. If we didn't get to your question and you want an answer, drop us a line. We'll reach out to our panelists who are all great experts at this. Again, everyone, thank you so much for joining us.
Thank you, Ron.
Thanks, everyone.
Cheers.
Moderator,
Bye-bye.
Ron. Take care.
Take care. Goodbye.